It's only about 3 months ago that FedEx was actually really upbeat about its prospects for its 2023 fiscal year. They said they were going to see improving margins. They were very happy about end demand, and they felt as if they had gotten their management act together as a result of some activist investor pressure. That has all been washed away today because we're probably going to see the biggest single-day decline for the stock if the current moves hold until the end of the session as a result of this profit warning and the fact that FedEx has pulled its 2023 profit guidance. As you articulated, they're talking about accelerating headwinds into the global economy, softer consumer spending, softer package delivery, rising input costs, and a whole bunch of other issues that are probably going to mean weaker earnings going forward. That's pulled down some of its rivals, including UPS and indeed Amazon as well. And it's really made a lot of people rethink their prospects for not only the domestic economy, but the global as well.
I want to dive in specifically to look at the statement here from CEO Raj Subramanian of FedEx. Here's a look at what he said, I think largely to the point, as you said there, Martin, about these headwinds. The CEO of FedEx saying global volumes declined as macroeconomic trends significantly worsened later in the quarter, both globally and here in the U.S. While this performance is disappointing, we are aggressively accelerating cost reduction efforts. Now, Martin, part of those cost reduction initiatives will be FedEx closing about 90 office locations. There will be several corporate locations they're looking to close as well as canceling products. Can you help us break down that statement? And I wonder if there's anything that jumps out to you that maybe the rest of us may be missing.
Well, the one number that really was stark for me, JD, was when I was looking at the anticipation for profit margins in the FedEx Express business. Now, they have a bunch of subdivisions. They have Ground, Express, et cetera. But Express is sort of the bellwether of the group because it comprises businesses across the whole of the global economy in about 220 countries around the world. They are going to see a significant compression in operating margins in Express going into this their fiscal second quarter. And that is really unnerving for investors who are looking at not only compressed margins, but also increased cost cuts at the same time. So if FedEx isn't able to tell us right now that these cost cuts are going to improve margins, then people have to really be worried about the end demand prospects for this company and indeed the global shipping industry, which of course is indicative of global growth projections. So I was really struck by that number. I think the cost cuts are probably inevitable when you've gone to your investor base only 3 months after telling them all is well to tell them that all is not well. You have to put something on the plate in order to get at least a little bit of confidence in your investor base. And that always ends up being cost cuts, job losses, and different things like that. I just don't know if that's going to be enough to encourage the kind of confidence that management needs from that investor base, because it's just been such a short time since they were very bullish on the outlook. And of course, they've already been under activist pressure, and I would imagine that's going to continue.